Investing in an ETF is often the safest and most hands-off form of investing, and most of the time you can do it without even lifting a finger.
However, although there are many pros to investing in ETFs, there are also many cons. And if you're in Ireland, this is primarily the tax implications of ETFs.
In this video, we're going to run through exactly what an ETF is, the pros and cons of ETFs, and of course, the tax implications of investing in ETFs when in Ireland.
And if you are already familiar with ETFs, you can use the timestamps below to jump straight to the section on taxes in Ireland.
And of course, if you want to get a full overview or a refresher on ETFs, stick with us for the whole video. I'm Steve.
I'm Cian.
And this is the Learnings Report, a show where we make investing accessible and understandable for everyone.
This week, we're talking about ETFs, and specifically ETFs in Ireland.
Let's get it. What is an ETF? An ETF, or an exchange-traded fund, is a type of investment that usually tracks an index, an industry, a commodity, or a group of other assets. Think of an ETF like any other stock. It trades on a stock exchange, such as the New York Stock Exchange. Its price changes throughout the day based on the supply and demand for the company's shares, just like Amazon, Coca-Cola, or any other individual company. However, ETFs are a little bit different to individual stocks because they are made up of more than one company. So you can think of an ETF somewhat like a basket of stocks. The basket is the ETF, whereas all the stocks that make up the ETF are in that basket. ETFs can be comprised of just a few stocks, for example one that tracks the electric vehicle industry, or it can track a couple of hundred stocks, such as one that would track the S&P 500 index. So when you buy a certain ETF, you're buying a small piece of every single company that is in that ETF.
So what are the pros and cons of ETFs? Let's start with the pros. Number one, it offers instant diversification. So as Steve just mentioned, if you buy into an ETF, you get exposure to multiple companies as opposed to just one. Number two, ETFs have low expense fees, and this is a tiny fee that you have for the convenience of owning an ETF. Number three, ETFs trade like any other stock, so they're quite easily accessible. Number four, ETFs are a form of passive investing. You can basically set it and forget it. Number five, ETFs can pay dividends, so you are entitled to a portion of the dividends as the ETF holder. And for many, it's the easiest and safest way to invest.
However, there are some cons that you need to remember when investing in ETFs, especially if you're investing in ETFs when living in Ireland. So what are the cons of ETFs? Well, firstly, ETFs in Ireland are not taxed like individual stocks. The ETF tax rate in Ireland is 41%, which is called the exit tax rate, while CGT, or capital gains tax, is 33%, and this is what you pay on individual stocks. The second big con, especially for Irish investors, is what we call the deemed disposal rule, and this just means that every 8 years, regardless if you sell the ETF or not, you are liable to pay 41% tax on that ETF. We'll be talking a little bit more in detail on the deemed disposal rule later in the video, so stick with us or use the timestamps below to jump directly to that section. Con number three, you can't offset your losses on ETF investments with your gains from other investments, which is something you can do when investing in individual stocks. Con number four, you unfortunately can't use your €1,270 capital gains tax exemption for any gains that you make in ETFs. And lastly, con number five, since January 2019, Irish investors can unfortunately no longer invest in US domiciled ETFs, and if this is confusing to you, don't worry, we're going to go into more detail shortly.
But what are the costs and expenses associated with investing in ETFs? Even though you're investing in multiple companies, there is one price associated with the total ETF. When choosing an ETF to purchase, it's important to note the expense ratio. And the expense ratio is basically the small expense fee that you pay for the convenience of owning an ETF. Generally speaking, you should focus on passively managed ETFs that have a low expense ratio. Usually, these are ETFs that track a market index. An example of an ETF available to an Irish investor with a low expense ratio is VUAA, and the expense ratio is 0.07%. This is a fee that is deducted from your investment, so you don't have to actively pay it yourself. To find out an expense ratio, simply Google the ETF name followed by expense ratio, and you should find it pretty quickly. JustETF.com is also a good ETF database of European domiciled funds. You may notice while doing your research that you'll find ETFs that have a lower expense ratio than the one we previously mentioned, but as you do further research, you might understand that these are actually US domiciled ETFs and are not available to Irish investors. For example, the US equivalent of VUAA is VOO, and this has an expense ratio of 0.03%. We'll be talking more on this shortly, but just important to remember for now.
As mentioned earlier, If you are an ETF holder, you may be entitled to dividends that ETF pays, and ETFs can handle dividends in two ways. Method number one is accumulating dividends, and method number two is distributing dividends. Accumulating means that the dividends from your ETF are reinvested in the fund automatically without you needing to do anything. Distributing, on the other hand, means that whenever the ETF pays a dividend, which is likely every quarter, you will receive a portion of those dividends into your brokerage account. Generally speaking, ETFs that have accumulating dividend payments are likely better for you as an investor because one, it simplifies your tax returns, and two, you are likely to get a slightly better return on your investment over the long term. And how do you know if the ETF you're investing in is accumulating or distributing? Well, if you look at the name title of the ETF, you can see that some have ACC for accumulating and some have DIST in short for distributing. And that's simply how you tell the difference. And two quick examples for Irish investors. VUAA, the ETF we mentioned earlier, is accumulating dividend payments, whereas VUSA is distributing dividend payments. These two ETFs are the exact same, they both track the S&P 500, they just pay their dividends differently.
But how do you buy ETFs in Ireland and Europe? From our research, and at the time of recording, we reckon DeGiro is the best place to buy ETFs in Ireland and Europe. Why? Well, firstly, DeGiro has an extensive range of Irish and EU domiciled ETFs available to you as a retail investor, but also they have a range of commission-free and low-fee ETFs, which means it's cheaper for you to invest overall. Just as a note, when you search for an ETF on DeGiro, you'll likely see a number of options for the same ETF. This is because one ETF can be listed on a number of different exchanges. ETFs usually trade on multiple exchanges and in multiple currencies, even though the underlying pool of assets is the same. Generally speaking, it doesn't really matter where you buy the ETF on which exchange, but what we would recommend is buying the ETF in the currency that you trade in. You basically have two options for the ETFs on DeGiro: the free ones and the ones that you have to pay a fee on. For the free ETFs on DeGiro, we have a list included in the description below, so you can check out some there. For the paid ones, these usually cost around €2 per trade, plus 0.03% of the trade value, but this is quite small over the long term of the investment. Although it may be enticing to just look at the free ETFs and go for them, they may not always be the best ones for what you're trying to achieve. For example, the free ones may not include all the ETFs that you want, so you may be limited in your choices of ETFs. It's also worth remembering that it might be worth paying the trade fee in order to get an accumulating ETF versus a dividend distributing ETF, as you may save time not having to file a tax return every year.
Unfortunately, not all ETFs are available in Ireland and Europe, and that's really important to remember when starting your investing journey. When investing in ETFs, you need to understand where that ETF is domiciled, or in other words, where the ETF is based. ETFs can be domiciled in a number of ways. They can be Irish domiciled, EU domiciled, US, EEA and OECD domiciled, and offshore ETFs. For beginner investors, and most investors for that matter, you really only need to focus on whether the ETF is EU and Irish domiciled or US domiciled. This domicile rule can be a little bit tricky to get your head around, so Kino, help us out.
Irish and European investors can only invest in ETFs that are domiciled or based outside of the US. This is because since January 2019, Irish investors have been restricted from buying US domiciled ETFs. A quick indicator as to whether an ETF is Irish or EU domiciled is if it has UCITS in its name. This stands for Undertakings for the Collective Investment in Transferable Securities. I said, this stands for Undertakings for the Collective Investment in Transferable Securities. For example, we've highlighted some ETFs with UCITS here. The good news is that many US domiciled ETFs are available in Ireland and Europe, although they're just named differently. For example, you may have heard of the Vanguard S&P 500, which tracks the 500 biggest companies in the US. This is available in the US under the ticker symbol VOO. VOO is a US domiciled ETF, and therefore it's not available to Irish or EU investors. But we have the exact equivalent of that ETF in Ireland, it's just called something different. The ticker symbol for the one in Ireland is VUAA or VUSA. But you might remember from earlier, they're the same ETF, albeit one is accumulating dividends and one is distributing dividends.
And now for the part that you've all been waiting for, taxes on ETFs. First and foremost, no one is going to do it for you and no one is going to remind you to do it. It is your responsibility to pay and file your taxes. If you invest in dividends, especially when you're investing in dividends in Ireland, you are liable to pay tax on price appreciation of your investments and also on any dividends you receive. As mentioned earlier, the tax on ETFs in Ireland at the time of recording is 41%. The tax on dividend payments from ETF holdings are also taxed at 41%, but this again will come down to whether the ETF is distributing or accumulating. For accumulating ETFs, you won't need to worry about this tax. For distributing ETFs, you will need to pay it on an annual basis. Unlike regular stocks and shares, you cannot offset your losses in ETFs against gains made in other investments. However, for long-term buy and hold investors, especially those who invest in well-diversified ETFs such as those that track the S&P 500 for example, don't need to concern themselves too much with this because over the long term we've seen that prices and shares tend to increase in value over the long run. However, there is one thing you need to keep in mind as a long-term ETF investor, and that, as mentioned earlier, is the deemed disposal rule. Let's dive into that in a little bit more detail.
So Revenue has the deemed disposal rule, and this basically means that every 8 years, whether or not you have sold your ETF, you still have to pay 41% tax on that ETF based on the price appreciation over the previous 8 years. This contrasts with CGT or regular stocks, where you don't have to pay the tax until you actually sell the asset. At the 8-year point, you can sell some of your ETFs in order to pay this tax bill. Or, if you want to hold on to your whole investment, you can use your savings to pay for this. If, after deemed disposal, the value of your ETF goes down and you then decide to sell, you can get a tax rebate from Revenue.
So how do you pay the tax that you owe on your ETF investments? Well, first and foremost, you need to remember you do not use the form CG1 like you do with individual stocks and shares. You are likely going to have to file one of two forms, Form 11 or Form 12. You file Form 11 if you are a chargeable individual, and a chargeable individual is generally a self-employed person, someone whose main earnings are non-PAYE, or a PAYE earner who also earns over €5,000 from non-PAYE sources. And just for clarification, a PAYE earner is basically someone who is employed. So if you have a job, you're likely a PAYE earner. Form 12 is what you file if you are a non-chargeable individual. And this is the category that most of us are going to fall under. And this basically just means that your main source of income is PAYE, but you have non-PAYE source of income less than €5,000. If you have any questions on Form 11 or Form 12, do let us know in the comments below, but we'll also link a couple of things in the video description which should help you out.
Okay, we know that was a lot, but hopefully you know a bit more about ETFs. We know we've been getting some comments from people wanting clarity on ETFs, so hopefully we've cleared up some of those issues for you.
And of course, if we haven't and you have further follow-up questions, do let us know in the comments because that's where we'll be answering them. And as we said, we will have links in the video description to all the information that we've discussed, and that should help you out too.
If this video did help you, make sure to give us a thumbs up. We release videos every week, so please make sure to subscribe to the channel if you want to hear more. But otherwise, we'll see you in the next one. Bring it home, boys.
ETF, ETF, ETF.